Did you ever imagine oil from 100 to 40 or to somewhere in the vicinity south?
Well, I think it's very hard to predict commodity prices, and if you look at the history of oil prices, they're just these incredible fluctuations, and it happens. So, sure, I mean, it's possible it'll probably be over 100 again someday, but we might be over 100 when it happens.
Well, we might be over 100. We'll talk about international relations and oil in China and emerging markets in this hour. But what does this cheaper oil price mean for America? It's got to be a plus, 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 right?
I think it's a plus, plus, minus, I mean, because we're a big producer. Shale was certainly, a part of our story. It's better for Europe and Japan, but it's good for the United States.
Right. Howard Ward, what does it mean for your equity portfolio? Do you load the boat on the quality names like Exxon or Anadarko, or are you under the oil desk right now hiding?
Well, I would certainly, if I didn't have any oil exposure, I would use this weakness to accumulate some, and I would probably recommend EOG Resources as my go-to name in the energy patch. As Ken said, predicting the price of oil is very difficult, and unfortunately or fortunately, energy stocks tend to be highly correlated to the price of crude. So you are making a bet on the price of oil when that happens. With all due respect to Goldman Sachs' call for $20 oil, when oil was at $80 and $90, I don't think they thought it was going to go to $40. So given the unpredictability of oil, given the supply response to what's happening, it's been slower than we would have expected. But I would certainly venture to estimate that over the next 12 months, we'll be looking at a higher price of oil, perhaps materially higher.
And David, what's important here, whether it's Ed Morse at Citigroup or Jeff Curry at Goldman Sachs and the others, is they have a vision out 2, 3, and 5 years. They're not worried about where it's going to be in 3 weeks.
No, exactly. And then you have other investors like Warren Buffett who are thinking about it in 5, 10, 50 years, right? And they just invested in Phillips 66 downstream. Right. They saw an opportunity there.
Right. Of course, that is a little bit different because actually they benefit from lower prices because of the spread they get on refining. But look, when prices are down, you want to buy. And, unfortunately, the price of crude fell so quickly, down 50% still from the June 2014 peak. We're all conditioned to associate that with some sort of doom.
Ken Rogoff, you have been out front with Carmen Reinhardt about saying don't just look at visible debt. There is private economy debt as well. Part of the heart of your research, including your claim book this time, is different. Is Brazil exposed to the private debt you worry about in your book?
Well, it has a lot of corporate dollar debt, and when the exchange rate, tanks by, 60% or something, then obviously that's problematic. So that's certainly one of the elements going on in Brazil. The government debt, it's not so worrisome, but there's certainly a lot of corporate debt. And private debt's grown. I mean, it's not at the levels we see in advanced countries, but sure. But it's one of many problems in Brazil.
Well, Brazil it seems to me Brazil is one thing that many of us in the media have really not paid enough attention to. It's a large economy. I think it's the second largest in the Western Hemisphere, right? It's 10 times the size of Greece, with all the attention we spent to Greece. And they're looking at some pretty lean times, it looks like, for some time, don't you think?
They are. I mean, it's a combination of two things. I mean, the leading thing is that global commodity prices have fallen, and they were sort of riding off, drafting off China. But unfortunately, Dilma Rousseff has followed a lot of interventionist, very counterproductive policies. Didn't matter so much when the economy was growing anyway. And now, there's nothing to fall back on. And they're having also trouble with their fiscal policy, their monetary policy, because they weren't more careful in the good times.
But Rousseff, as I understand it, pursued really a populist sort of policy.
Oh, absolutely.
Really that was her base, as it were, politically. But now she's sort of in a jam because she's going to have limited resources to be able to appeal to those masses, isn't she? And she doubled down on that play. I mean, Levy, the finance minister, wanted to go the other way with more of an austerity program. But is he going to be able to do that?
Well, I mean, they're not sustainable. They've been downgraded to junk. There's something needs to happen. He was brought in. It was very brave of him to come in when there isn't really the political support to do anything.
By the way, he had a good job in the private sector. He didn't have to take this job. It's in fairness.
No, he is a very brave man, and so yeah, it's very tough. And the central bank, at the same time, they haven't really reformed it enough. And so it's somebody in Brazil said it's like Arthur Burns trying to be Volcker. After inflating all this,
I like that.
I'm going to change and not inflate anymore.
Very quickly, Howard Ward, within this, there has to be opportunity. When do you go in and overweight large cap international stocks or emerging market stocks? Is there a trigger that you look for at Gamco?
Well, you know, again, market timing is very perilous. Just like timing commodity prices, timing the stock market is pretty hard to do, and few people do it.
But Templeton would say shares are on sale.
Well, I don't know if they're on sale or not, but they're, I think, very defensible. You know, we've had a correction. We had the full 10% plus correction. I think we're down maybe 8% now. That was overdue, and a lot of stocks are down 20%. Some more. The multiple on next year's earnings is 15. You have an economy with about 3% growth, 2% rates. I can't believe the stock market stays down for very long or goes very much lower. So yes, I would be a buyer, and you want to go where the fear is the greatest, and right now that would be in the companies that have that international exposure.
We're thrilled to have you with us. I had 4 out of 7 children call in the last 48 hours. Their iPhones have broken. Did you know that? It has to do with Apple. It's your fault. You keep talking about
I have to tell you, Tom, I set my alarm for 5 o'clock this morning on my iPhone, and it didn't go off.
Okay. Howard Ward oversleeping on the way to Bloomberg Surveillance, and Ken Rogoff with us as well of Harvard University.